Very good evening. You've joined us right here on the Budget Debate and the Budget Evening on ET Now, India's #1 business news channel. We're going to analyze the budget over the next 90 minutes with some of India's finest macro and corporate experts and two key architects of the budget joining us live on the show as well this evening. But first, the top 10 headlines from Budget 2016 have earned more, spent more, and not given away anything on the fisc, says Finance Minister Jaitley in his first interview after presenting his second full-term budget. The FM says any revenue boost will help consolidate the fisc.
It's a day of high volatility on the Wall Street. Sensex sheds over 150 points, even as hopes of rate cut emerge amidst very wild swings.
Disappointment for state-run banks, though. Finance Minister pegs PSU Bank recapitalization for FY17 at 25,000 crore rupees. Bank stocks, however, rally on hopes of an interest rate cut by RBI.
Has the ghost of the retro tax finally been buried? Finance Minister Arun Jaitley says there will be no new retrospective tax. Also announces a one-time settlement window for all pending cases. Puts it in the statutory book.
Setback for auto companies and cigarette makers. The FM imposes a new levy on petrol and diesel cars ranging from 1% to 4%. Big hit on ITC as the duty on tobacco products is hiked by up to 15%.
It's a big push for startups. Jaitley declares a 3-year tax holiday for the new generation entrepreneurs. Also reduces the lock-in capital gains tax relief to 2 years from the earlier 3.
India Inc. gives a thumbs up as the Finance Minister walks the talk on fiscal consolidation. An exclusive chat with ET Now. Bharti Airtel Chief Sunil Mittal says the move will boost India's credibility. Also says higher rural outlay will help pump prime the economy.
Thank you very much for tuning in at 9 p.m. right here on ET Now. It's been a power-packed coverage of what is perhaps the most unprecedented budget coverage on Indian television. We've really got you cutting-edge technology graphics. We've got you the best minds in business, corporate, India, and of course markets to analyze this budget for you. Joining us right here on the big picture and the big debate on ET Now is Shaktikanta Das, the Department of Economic Affairs Secretary. Also giving him good company is Amitabh Kant. He's of course going to be moving to Niti Aayog as CEO beginning tomorrow. We've also got a very expert panel here. The Super Budget Panel is what we are calling them. Consulting editors Swaminathan Iyer and Maithili Bhusnurmat. The architect of the first budget as far as Arun Jaitley is concerned, Dr. Arvind Mayaram, and of course Mukesh Bhutani of BMR Legal. Thank you very much each one of you for being with us. Swami, to you then. You've had the good fortune of going through the budget in all these hours now. You've printed the copy for print. What's your take? Is this a transformational budget, as Mr. Jaitley said in his first few sentences when he rose to present it?
It's not transformational. It is what the economic survey, what do they call it? Persistent, encompassing incrementalism. I like that Arvind Subramanian's phrase, and in a sense, I think, it sums up the budget. This is exactly what you're trying to do. You're trying to be encompassing everywhere. I will progress, without necessarily showing some enormous big bang. And it's a perfectly reasonable and plausible way to go forward.
Right.
I will say that they have taken care that this cannot be called a suited, booted budget by any chance. Without doubt, I mean, they are going to have a rural road getting to every single village. They're going to have cooking gas going to every single poor household, 5 crore household. There's going to be rural electrification, 100%. I mean, I don't believe, and probably you don't believe, that agricultural incomes are going to double in 5 years.
No.
It's not up to him. And certainly that rate of increase would be a ridiculously high amount, so we don't believe that. But without doubt, a substantial effort to help the bottom half of society, and this is being financed by taxes on the upper 10%. I mean, you've got the surcharge on high incomes, you've got the, as you mentioned, luxury cars and so on. Yeah. Jewelry is going to be taxed. There's going to be 10% tax on dividends above 50 lakhs. So basically, in an extraordinary fashion, it's a somewhat soak the rich to help the poor kind of budget. although it has not been put that way.
But on balance, you'd call it a good budget. Is that?
On balance, it's a good attempt to steer India through some terrific storms. But I'm afraid the storms are such that all your budget figures may go haywire.
Yeah, sure. Maithili, I know, has a different take. So I want to first throw it to our two experts, the ET Now experts, and then, of course, get the view in from both Mr. Amitabh Kant and Shaktikant Das. Maithili, your take on the budget. You don't believe it's transformative. You don't believe it's got the big bang.
Yeah, it certainly isn't transformative, and nor does it really have a big bang. My grouse more is that it's a missed opportunity, because you had many of our financial parameters, the fiscal parameters, in your favor, whether you're looking at the revenue deficit to fiscal deficit, interest payments as a percentage of total revenue expenditure or your revenue receipts. So there were a number of positives in terms of the fiscal leeway that is available to you. So I think this was an opportunity for the government to take up a slightly more relaxed view, particularly since the rating agencies had already gone on record saying that given the fact that the nominal GDP this year is so much lower, they wouldn't come down too harshly on government if they were to use that extra leeway to give a push to the government. So though I would agree with Swami that it's not a painted, suited booted budget, I'm not quite sure it's not painted and dented, because as far as the revenue estimates are concerned, particularly the non-tax revenue, they seem to be slightly on the optimistic side, and expenditure seems conservative, because last fiscal the expenditure has been higher than budgeted, despite the fact that we had huge savings in oil subsidies, despite the fact that there was no pay commission, no ROOP.
Right.
So this year, in fact, when we have both the pay commission as well as the OROP, and they're not going to get that kick from the subsidies, oil subsidies, I'm pretty sure your expenditure will overshoot the BE, in which case what happens to your fiscal deficit? Maybe that's why they say they're going to review the FRBM.
Sure. So, here are the rules of the game. We've got enough time over the next 15 minutes. We've got Maithili and Swami hopefully taking on Amitabh Kant and Amitabh Kant and Shaktikant Das, and we've got Dr. Mayaram and Mr. Bhutani, who I'm sure will play neutral referees, so to say. So this is coming your way, Mr. Shaktikant Das, as the Secretary of the Department of Economic Affairs. We're going to ask 5 questions over the next 40-odd minutes, and hopefully we'll arrive at some sort of consensus on all of that. The first question we're asking, where is the big bang in the budget? Is there a big bang at all? Swami and Maithili have a slightly different view. So I want you to come in and say, where do you think is the big bang in budget 2016, given the fact that many believe this was the best political opportunity for the government to reset the economy?
Well, first of all, good evening to all of you. In Indian context today, may I, ask very sincerely, what is a big bang? I mean, this question has been raised almost after every budget, that there are no big bang items. What is a big bang? Nobody really knows. And let us remember that we are not in 1991, or we are not in 2000, or we are not in 2000. The reforms started almost 26 years ago, and a lot of things which had to be done have been done, but yes, there are still a lot of items which need to be done. Now, with regard to the characterization of the budget, I would not like to get into individual characterization, but let me reiterate, this budget is a budget of transformation, it's a budget of change, and it addresses all the critical and the key challenges which the economy faces today. Whether it is the agrarian crisis, whether it is the rural crisis, rural distress, whether it is the irrigation sector requirement, rural infrastructure, whether it is the investment requirements of railways, roads, all key areas, all critical areas, problem areas in the economy has been challenged. With regard to missed opportunity, what Maithili said, that it's a missed opportunity. Now, I would not quite agree with that. You see, government agencies and departments have a capability to spend. Merely by increasing your allocations, by going for excessive borrowing, you are not really helping the economy, because the departments should have capability to spend, which I must recognize has substantially improved over the last few months. But then the stepping up of the capability to implement, capability to absorb additional expenditure, it needs time. And second thing, we should not compromise the quality of expenditure. Merely if you pour a lot of money, there is a possibility that the quality of expenditure will suffer. So therefore, these things will have to be kept in mind. And then let us not forget that the most important thing of this budget is that the finance minister has adhered to the fiscal deficit target of 3.5%. Now that is very, very important because you are leaving out sufficient space for the private sector requirement, you are not crowding out the market, you are reducing government borrowing, and we have internally examined the question of the debt sustainability of the government. So taking all these things into account, I think it's a very balanced, pragmatic and reasonable budget, a budget which is very credible, a budget which is doable.
All right, so that's one architect of this budget. Let's go to the best spokesperson of the government and Mr. Amitabh Kant. Is this a case of missed opportunities? At least that's what Maithili seems to believe here, and some of the commentators also believe this could have been the big reset. This really isn't big reset. It's incrementalism, yes, in the right direction, but this is not big bang. This is not the big reset. I don't want you to run down on the word big bang, though.
No, I think, Supriya, it's a very, very smart budget. It's a very innovative and a very creative budget. If you look at the Indian economy, to my mind, the key challenge was about providing liquidity into the market. The finance minister has done that very effectively by focusing on the road sector very significantly, providing a huge outlay of 97,000 crores, by focusing on the agricultural distress area in a very, very big way. There's one key thing which has not been commented upon, and that's simply because it's hidden in the annexures of the budget, is a huge emphasis on actually manufacturing. The FM hasn't talked about it in the budget, but if you read the annexure very carefully, every single item that the DIPP had proposed in terms of inverted duty structures, providing a thrust to textiles, providing a thrust to electronic manufacturing or to leather, all of that figures very, very prominently. There's a huge emphasis there in terms of the tax proposals, and to my mind that is going to give a big push to manufacturing in India as well. The other key thing is about job creation, and one of the key things is this provision of 1,000 crores where the government will put in the EPFO contribution for a period of 3 years to be able to give a huge push to job creation. I think the other key aspect is about irrigation, where there's a lot of front loading of irrigation projects. The Pradhan Mantri Sinchai Yojana, where almost 89,000 crores is required, but the FM has said that he'll create a separate institutional arrangement through NABARD and allow NABARD to raise long-term funds that in a very efficient manner to be able to ensure that these command area projects are able to get implemented very quickly. And he says that 23 of these projects will get completed by the end of next year. So I think if you look at in totality, the push for agriculture sector, the push for infrastructure sector, the push for irrigation in a very big way, job creation on the other side through the EPFO mechanism, and then looking at the impetus being provided to manufacturing, and lastly giving a whole series of benefits to the startup movement in India, looking at the whole package of all these creative and innovative and smart measures. I think to my mind they would all appear to be very, very transformational. I think it makes a very big paradigm shift in the way budget formulation has been done in the past. I think to my mind, he's really pushed the envelope very, very hard, keeping the fiscal deficit right intact there. So I think to my mind, it's a very, very transformational budget.
Right. Let me throw it then to Dr. Arvind Maram. I know it's going to be tough for you to take on your former colleagues in the government, but I'm sure they'd want to hear from you as well. On balance, do you think, would you call it a transformational budget, or would you call it as a good incremental budget?
Let me first say that Shaktikant is a very old-handed budget and very thorough with his numbers. So I don't think I would challenge his numbers so much. But I can say one thing. If you read budget speeches in the last 10 years, for instance, or 15 years, which includes Mr. Yashwant Sinha's speeches and others, every one of them have claimed at that point of time that they are transformative. So I do believe to that extent, as others have been, this would also be transformative, because I guess every budget must be transformative in some manner. Now the problem which I see here is this. On the plus side, I believe, and I disagree with Maithili on the fisc. I think the fiscal deficit discipline is absolutely necessary for credibility of the government. And to that extent, I think the finance minister has stood his ground despite a lot of pressure for relaxing that. As I've said earlier that in my reckoning, in a budget of close to 20 lakh crores, 50,000 crores here and there is not that amount which you cannot find. And having seen how budgets are and how budgets are made and how budget savings happen, that amount is easily, you can find if you want to spend more on something which is credible. But to move away from fiscal consolidation, it's a temptation. Last year that they had given into that temptation and said this is one time, and then this time if it had happened again, then it would have been this time and next time and the next time again. So I think to that extent this has been a very positive thing that has happened. But on the other side, when you look at the demand part of it, I think infrastructure has a lag. It takes 2 to 3 years before it will kick in and what you will see. It is very critical and important. I think it is very positive that so much of emphasis is there on the infrastructure side. But one, it would take a lag. Number two, we don't know how it would happen because land acquisition, for instance, continues to be a problem. So how you are going to construct so much of roads or other things without land being acquired is something that we need to see. The other part we also have to see, which is not here, is a large number of metros, for instance, which are being approved. Metro lines, etc. in different, now they are infrastructure but they are very capital intensive also. Like the bullet train is capital intensive. I don't know how all this money will be found if all of this has to be done. Some new dedicated freight corridors. If you look at the railways operating ratio at 92%, you would see a large part of it is a run on their funds. And that is why it is done. It is not on account of efficiency or revenues generated. So there are those questions which we will need to go into greater detail to see where it happens.
But I think you prompted me to move to the next big question that we're asking today, which is really, is this budget going to trigger the investment cycle and create jobs? I know Mr. Kant spoke about it briefly as far as job creation thrust, but Mr. Shaktikanta Das, the point that Mr. Mayaram was making as well, that the infrastructure push is not going to give you immediate results. It's going to take a few years, maybe 2 to 3 years before you start seeing results on the ground. Is this budget really going to trigger the investment cycle? The big disappointment in corporate India over the last 18, 19 months is that the investment cycle has not been triggered yet. Corporate India's balance sheet is severely damaged. You'd know it more than anyone else. So the thrust has to come from the government. And is there enough of a push to kickstart the investment cycle in the budget? Mr. Das.
Yeah, there are a number of steps, and I would like to just mention 2 or 3 of them. The first thing is with regard to the infrastructure projects. It's not as if a beginning is being made today. Over the last several months, the finance minister has explained it in his budget speech, and if you look at the numbers, the pace of award of new roads, the pace of completion of roads, whether it is the highways done by the NHAI or it is the rural roads which are being done, the pace of completion of the roads, the road projects have been expedited. In the last year, for example, in the year that which we are going to conclude now, in the highway sector, number of measures have been taken. We have gone in for hybrid financing models of road projects, stressed projects. The promoters have been replaced. Where the projects were stuck due to lack of equity funding by the promoter, government has provided mezzanine and equity finance. So the new announcements which have come in the budget are not a beginning of a new cycle, but they are a culmination and a continuation. More than a culmination, they are continuation of a momentum which has already been built. So therefore, I would expect the effect to be felt in 2016-17, whether it is the road sector or it is the irrigation sector or the other sectors. Then with regard to certain stalled projects and projects which were held up due to various reasons, please recollect what the finance minister said about the PPP projects or the projects in infrastructure sector which involve private sector funding. which involved private sector participation. There were bottlenecks, there were reasons as to why these projects were held up. So now the government is going to have a new resolution mechanism to resolve the disputes in those kind of projects, provide a legal framework where those kinds of disputes can be resolved, so that the stalled projects are also revived. And let me just mention one more point. Supriya, just one more point. I will just complete, then I will take your next question. There are other announcements.
A question that comes your way from your former colleague, Mr. Mayaram here, but you can go ahead and make that point of yours.
I'll make this point very shortly. Please remember the announcement which the finance minister has made about the reform in the transport sector. The entire passenger transport segment, the road passenger transport segment is going to be opened up, and that is not only going to create huge amount of public convenience for ordinary commuters, but it is expected to bring in lot of investment, lot of new jobs into small and medium towns in the country.
Fair point. You want to come in on that?
No, I take the point that the announcements are there, but one question that I'd like to ask is, how much time does it take for translation of the announcements into reality? Look at the bankruptcy law. 2014 July this was announced. It is not on statute as yet. NIIF was announced in July of 2014. It has just been kind of launched in some manner. So, do you really believe, Shakti, that the announcements that you have made now will really fructify in this year? Or as in the past, the budget announcements will go forward into, I mean, I'm very sure that if you look at the announcements of 14 and 15, July 14 and 15, the large number of them have not yet been fulfilled at all. I mean, they are still somewhere administratively being examined. So, going forward, how soon do you think it's really going to fructify?
I mean, you have a point that implementation is very important, and the current focus is entirely on implementation. The bankruptcy law, as you are aware, the bill was introduced in the last session of the Parliament. It's before the Joint Select Committee, and the Joint Select Committee has begun its deliberations. We expect that law to be passed in the second leg of the budget session. With regard to the NIIF, we have already signed understanding. We have entered into memorandum of understanding with some 3 sovereign funds. Yes, it has taken time, but it was not an easy thing to be done. But coming back to this year's budget announcement. No, I'll just say
what I'm
that
saying
the focus,
is that whether it is bankruptcy.
No, the focus has to be entirely on implementation, and especially for infrastructure projects, especially for road sector projects, for irrigation projects, lot of preparatory work, lot of groundwork has been done. So I would expect things to be implemented much faster and in a much more tight time schedule. We should not go by the past. I think we are breaking new ground, and I'm quite optimistic and I'm quite confident that we will be able to maintain the pace of implementation.
All right, I'll just leave that part of the debate here, and let's turn across to the other debate, a point that Dr. Mayaram was making earlier, which is fiscal deficit, and he votes in favor of the fact that we've met that line. We've kept our rate for 3.5%. Mr. Kant, if I may come to you on this, are you a big votary of this? The government had to, restore its credibility. It has gone ahead and met 3.5%, but this is going to be a tall order, especially because the government is talking about very high liabilities. Have they taken up a very big challenge, Mr. Kant?
And Supriya, can I just add?
No, I agree with Arvind on that.
In absolute terms, is 20,000 crores less. In percentage terms, fine.
Sorry, go ahead, Mr. Kant.
No, I agree with Arvind that we have to behave in a very disciplined manner, and the finance minister stuck on to his commitment, and I think demonstrated the commitment of the government to maintain fiscal discipline. Having said that, I think it's very important that we enhance better, one is good implementation on ground, which is very critical. But I think overall, the economy, for it to grow over a long period of time, the total factor productivity of the Indian economy must improve. Every single country which has grown for long periods of time, productivity levels have risen at very sharp rates. I think this happened in Japan, this happened in Korea, this happened in China in recent times, and I think the country needs to lay a lot of emphasis on that. Secondly, I think there's a need to prepare a vast number of projects which are completely de-risked before they are put out into the market across sectors, across ports, across roads, across highways, across railways. I think we just do not have the machinery to put out too many projects which have been actually where a lot of structuring has been done, where SPVs have been prepared, where all approvals are in place and they are put out into the market in a very de-risked manner. We need to put hundreds of these projects out into the market very quickly, and we need to do this very fast. I think third is, to my mind, if you look back about 2.5 years back, every single sector of your economy was stuck. From power to coal to telecom, every single sector of the economy had got stuck. Now we've got it all back again. We've got it all rearing now. I think we just needed that right impetus to get this rolling in a much bigger manner. And I think this budget acts as a big catalyst towards there. And to my mind, this will help in pushing each one of these sectors forward. I think the fourth point, the key point to my mind, was the economy lacked liquidity. There was a lack of, we would always prided ourselves that there's adequate demand, but the demand had dried out. But with this, with the amount of money that has been put into irrigation, into roads, into a vast number of agricultural activities, I think that liquidity and that demand will come back into the market. And I think that will give it a big thrust to the Indian economy.
All right, Maithili wants to counter you here, and I must give the floor to her.
I thought, Mr. Kant, liquidity is provided by the Reserve Bank of India, and government only spends the money, and there, as I said, the fiscal deficit, the absolute number is 20,000 crores less. So where is the great virtue that, abiding to overachieving on your fiscal deficit target? In terms of percentages, yes, you're 3.9, but given the fact that your nominal GDP was so much less, your absolute number is 20,000 crores less. Surely that could have been given for bank recapitalization.
No, you've got a point that banks need far greater amount of resources for bank capitalization. That's critical. To my mind, bank recapitalization is critical, but I think overall there's a constraint in the hands of the finance minister. But he's committed himself to say that he'll provide all the possible resources. As we go along, I'm sure he has this commitment, because to my mind, giving private sector investment a big boost is necessary in India's economy today, and that really requires a big thrust to bank recapitalization. He's got it off on the right trend, and we'll see how it goes further.
Bank recapitalization is one of the things that we're going to talk about, Mr. Bhutani. I want to get a word in from you as well, but Swami, to you first. On the fisc, I get a sense that probably the government is confused. It wanted to appease both camps. On one side, there was a camp that said that, you should relax the fiscal deficit target, and the other camp that said, no, you must stick to it. So what they've done is said we'll stick to 3.5% for next year, and then said that we're going to set up a committee to review FRBM in the medium term. Do you get a feeling that the government is confused on what to do with the fiscal deficit?
No, I don't think so. If you're really going to stick to 3.5, plus 3 next year, you sort of reach the target, and in some sense you have to look beyond that. But beyond that, as I said, you look the world over, there are many different models. You will find that lots of places have abandoned using a figure, and they say we will use a cyclically adjusted target, which nobody has mentioned it so far. But what's very, very clear is that depending on the cycle, the figure has to be flexible. There is a notion like Gordon Brown's golden rule in England, where he said that, borrowing will only be earmarked for projects, no borrowing for... So there are various other issues to be looked at apart from just that fiscal target. So relook at FRBM is entirely justified. It is in no sense contradictory. Right. But just to take up one thing, Mr. Shanti Das says, what do you guys mean by Big Bang? Okay, let me tell you. And the same thing I told Jaitley in New York.
I'm going to come to you to outline your Big Bang and why it hasn't been delivered. But I must get a word out of you, Mr. Bhutani. In your view, and of course I'm sure you've had a call with all your clients and the really high-profile ones, corporate India was of the view that they should loosen their purse strings. They can let the fisc expand and they can justify it. They've still not done that. What are corporates telling you, and what in your assessment, what's the verdict out there?
Well, I'm not going to use jargons, is it transformational, smart, or path-breaking, but I think the budget is unorthodox. And I'll tell you the reason why I use this term. I think there was a lot of temptation for him to loosen the fiscal deficit. In fact, I was betting that he would not meet the fiscal deficit target. So I think that's one reason. And he had all the reasons: global crisis, shortfall in tax collection, so on and so forth. The reason it is unorthodox is because we have seen successive budgets ignoring the ease of doing business from a tax policy and tax administration standpoint. So the larger picture from a tax reforms agenda is that he's trying to tax the rich a little bit more and put this money on to the social schemes. I also feel that in the fine print for the budget, a lot of the past seems to have been buried, which suggests to me that here is a government that's willing to listen and act on it. And the two prime examples are place of effective management. I mean, I have gone on record saying it was like an unguided tax missile, which was legislated last year, and the guidelines suggested the same thing, so that has been deferred. Vodafone and retrospective tax bogey, now you have a law which will deal with how do you settle the past cases. We are talking about dispute resolution, we are talking about voluntary disclosure schemes. So I think if you look at it from a tax policy and administration standpoint, and there are a lot in the fine print to be able to address the ease of doing business in India, I certainly feel.
So you call it an unorthodox budget? Okay.
I think it's unorthodox.
Right. We've got two more ground areas to cover. But before that, I want Swami to take on Shaktikanta Das. When you said that when Mr. Das said that what is the big bang that you're looking for, Swami, why don't you tell us what is the big bang that you were looking for in this budget?
No, I wasn't necessarily looking in this budget because I've lost faith. But you say, what is the big bang? No problem. Privatize the 10 worst public sector banks, corporatize the railways and all the ports, and put at least 100 politicians and businessmen in jail within 2 years.
Well,
I think nice, easy, big bang.
I don't know if Mr. Das can answer on the third point, but on the first 2 points, Mr. Das, we had Yashwant Sinha join us a short while ago, and he made the same point as well. I don't know why in this current establishment, privatization is seen as such an ugly word. Do you think that the government could have done more on that? And I'm going to come to Mr. Amitabh Kant as well, because as a CEO of Niti Aayog, he's going to be handling a lot of the strategic sale that the finance minister spoke about. But Mr. Das, you want to comment on the point that Swami made?
Yeah, I mean, first of all, I must mention that, it's a privilege to be on the same panel which has Swaminathan Iyer. I always read his writings with a lot of interest. And look, let us also remember that, the privatization of the banks, he also mentioned about privatization of the railways. Railways are undertaking a lot of PPP projects. So far as the banks are concerned, the finance minister has announced a roadmap in this year's budget, 25,000 crore of recapitalization money, with a clear-cut assurance that if more funds are required, he would find the resources for it. And as my former colleague Dr. Mairam said, in a budget of about 20 lakh crores, it will not be difficult to find savings of another 5,000-7,000 crores to top it up during the course of the year, as we have done during this year. The finance minister has also talked in terms of a roadmap for consolidation of banks, because our banks need to be, our public sector banks need to be efficient, they need to be big. So now at the moment, therefore, the priority of the government is to consolidate, to sort of accelerate the process of consolidation of the public sector banks. And maybe, as I think as the Prime Minister had said some time ago, maybe we should have about 7, 8 or 10 banks eventually. So that roadmap is also under preparation. A lot of work has been sort of undertaken in that, and the bank BBB, that is the Bank Board Bureau, also has now been constituted. So it is a question of achieving your objective, the instrumentality of achieving it. I respect Swaminathan Iyer's view that you should have gone for privatization, but after a lot of deliberation within the government, we felt that it is better to sort of go for a consolidation process at the moment.
Just to get Mr. Kant very quickly into this debate, and now that you'll be at Niti Aayog, you'll be in charge of identifying strategic sale. 20,500 crore is the target this year. Any PSUs already on your radar, Mr. Kant? And this is going to require some amount of courage, some amount of will to go through, because governments in the past haven't been able to do so. And this government especially seems to be very wary of the word privatization or strategic sales.
No, Supriya, I'm a great believer that we must give a big impetus to disinvestment, and the clear strategy has to be that public sector must perform or perish. And you know, we've done this earlier. You know, just during an earlier regime when Mr. Vajpayee was the Prime Minister, we've driven disinvestment very forcefully. There's no rationale at all for government to run hotels. They must be sold off. There's no rationale for government to run public sector units which have been running in losses for many years. So I think we lay down a clear roadmap for that and push this very hard. But one thing which I find very pleasing about the budget is that it, you know, it focuses on several aspects of use of technology. It focuses very sharply on direct benefit transfer across several schemes. It focuses very strongly on ease of doing business. And I think if you put it in totality, all these measures together will bring in a huge efficiency into the functioning of several schemes across government.
Mr. Kant, I have an interesting question coming your way, since you've coined many a phrase in the past, whether it's Incredible India or Make in India. What is the phrase you have in mind for the strategic sale initiative? You obviously can't have Sell India.
I haven't started my job in Niti Aayog. I'm going to begin that tomorrow. So that requires a lot of homework. It requires a lot of research. It requires a lot of homework. So you've got to give me breathing time on that.
Sure enough.
All right. The fourth question, the fourth topic that we want to cover is PSU bank recapitalization. And I know Mr. Kant spoke about it briefly. And I want to throw it to Maitri first. You know, our expert when it comes to banking. Maitri, you know, everyone knows about the gravity or the extent of the NPA problem. And people thought that it will be addressed in a more holistic manner in this budget. PSU bank recapitalization was obviously one way of doing it. Are you disappointed with what they have done on PSU bank recapitalization?
Yes, certainly. If the government was committed to recapitalization, the numbers, it's just peanuts, because this is what you had talked about in the scheme. That was a year ago. Since then, the position of banks has deteriorated considerably. In fact, informal numbers from various rating agencies, etc., say the quantum money required is 7 lakh crores, as against which you've set aside 25,000 crores, which is neither here nor there, in which case you might as well have saved that 25,000 crores. Either you provide more or you don't provide this and use it somewhere else. So if you were to boost the economy, that itself would have taken care of a lot of the problems of the bank. So this is neither here nor there.
So actually the eco-survey, Dr. Mayaram, talks about 1,90,000 crore that Indian PSU banks require up until the fiscal year 2019. Having said that, is the government underestimating the problem? I mean, what do they have in mind?
I think the gravity of the situation was recognized as back as July 2014, when the finance minister had announced that the PSU holdings of the government will be brought down to a level of 52%, which would have actually unlocked almost 1,25,000 crores, which could go back into the capital of the banks. Which would be substantial infusion of capital if you could relate it to 1,90,000 crores or so, which the economic service says is required. Right. Yeah. But nothing has happened on that. I mean, that is what I was mentioning earlier when I was asking Shakti, how much do you really believe that these announcements will be implemented? Because they are announced, but there's no going forward on them in many of these, which were very critical. Right. Very critical and very...
and Yashwant Sinha's budget so many years ago talked about lowering government stake to 33%.
That actually is not happening in this government or some governments to come.
You want to comment on that? I'm sure you would have got a sense that on PSU bank recapitalization, surely the expectation was you could have done more. I understand you were constrained for resources, especially since you didn't want to cross that Lakshman Rekha on the fiscal deficit, but 25,000 crores seems inadequate.
And if I may just add, is this the first tranche? For the benefit of our viewers, will you clarify? Are you going to put in more money? What is the sum you have in mind?
He can't say that now.
You're asking me?
Yes, sir.
Yeah. Now the provision in the budget, if you look, remember, if you recollect the number which was given in Indradhanush, it talked of 25,000 crore for the current year. We have discussed the requirement of recapitalization with the banks and also with the regulator, that is the Reserve Bank of India. And after discussion, it's not a unilateral provision which we have made. We have discussed with the banks, we have discussed with the Reserve Bank of India, and after that we have decided that 25,000 crore is sufficient for the moment. There will be many more steps which will follow, and you will have to, I cannot spell it out, but you will have to see how it unfolds. And let me reiterate once again that additional funds, as the Finance Minister has mentioned, as and when they are required during the course of the year, they shall be provided. But let me say that this provision has been made after a lot of deliberation within the government and with the banks and with the Reserve Bank of India.
All right, many provisions made with the banks, with the Reserve Bank of India. We actually must ask you this question, Swami, then. Are you okay with 25,000 crore rupee PSU recapitalization and the plant and the whole plan that yes, stake sales will happen this year? But remember, stake sales didn't happen when the markets were booming, and now that they're down, I wonder how will they go ahead and do so.
No, I think you need to distinguish between the total recap, a lot of which will be in the form of bonds of various kinds, and equity. This 25,000 is only the equity.
That's right.
For which he says we don't need more than this, but it does mean you will have to raise much more in the form of bonds in a hostile, in an unfavorable environment, with the help of the LIC and other organizations. It may be possible, in fact, to do that. So I said, I think you will go forward. I think the problem is not just that do they have enough money? Is there any demand for credit? Right now, I mean, K.V. Kamath was saying there was time when, they would have 3 meetings in a week, and each meeting would have 15 proposals, and now you have 1 meeting in a week, and it may have 1 proposal or 2 proposals. Right. So it is not the case that there is a huge demand for credit, and oh my gosh, can the banks meet it?
All right. Okay. Sure. Let's talk about the other key aspect that we need to cover as well, which is, do the numbers add up? It's always interesting to look at it at the end of the day, on a budget day, to look at, is the math in place? Are the assumptions too optimistic? Mukesh Bhutani, I want to come to you first. You've looked at the fine print very closely. On balance, do the numbers add up? Because there's some amount of concern on some of the revenue side projections, the nominal growth projections as well. How does it look to you first?
So the overall projection on the tax revenues of the government is reasonable. It's just hovering around 11%. But if you look at it from an excise duty and a customs standpoint, the projection sounds very bullish. And this is a question that we asked Mr. Shaktikanta Das earlier as well, and the Revenue Secretary as well. He mentioned that there is no specific projection that has been made for what the government will collect out of the VDIS scheme, because it's not a revenue mobilization measure. Now, that means that this question is even more important. How are you going to achieve more than 15% collection on the customs and excise duty side? The reason being, a significant part of excise duty leg up that was received last year was because of petroleum products. Now, if the movement of crude oil prices from an average of $45 in 15-16 is going to be $35 in 16-17, the leg up on excise duty on petroleum products is not going to be high. So on the math, my only question was, how are you going to meet the overall increase in excise and custom duty collection?
Talking about custom duty collection, Mr. Das, I have a question for you, and I was a little intrigued when I saw some of the cess that has been imposed. There's an agri cess. I understand you're devoluting so much to the states, you will want some funds of your own to invest. So there is an agri cess that's coming in, there's an infra cess that's coming in, which is going to make the cost of services and also the cost of products a lot higher. At the time when demand is a little muted, would you want to make services and products, even costlier?
Now, you see, with regard to the service tax, as the Finance Minister announced in his last budget speech, you see the service tax rates were earlier, together with the cess, it was at about 12.34%. So in the last budget, it was taken to 14%, then there was the Swachh Bharat cess of 0.5%, so 14.5%. And at that time, the Finance Minister had said that eventually the GST rate on services is going to be higher. It could be 16%, it could be 17% or whatever, that has to be decided. So eventually, I mean, when you are going to move to 16 or 17% tax, straight away you cannot take it from 12.5 to 16, because that will cast a lot of additional burden suddenly. So therefore, a decision was taken to move in a very calibrated and in a very phased manner. Last year it was taken to 14. This year it has now been taken, then it was taken to 14.5 with that Swachh Bharat cess. Now 0.5 has been added, and the Senvat benefit is also being given. So therefore, the eventual burden to that extent will be minimized. Now coming to the point which Mukesh Bhutani made, You see, the nominal GDP growth for next year is projected as at 11%. So therefore, a tax growth projection of which of about 11.7%. I think it is very much achievable, and the numbers are have been looked into very carefully. And there is an additional resource mobilization also, which is primarily in the indirect tax side, which will fetch a net, which will result in a net gain of about 19,000 crores. So we are very clear about the numbers; they are achievable.
Numbers look achievable. I want to get closing comments, but before I do that, Maitli, to you, nominal GDP of 11%, spectrum auctions, or from telecom, they're looking to raise about 98,000 crores. Even divestment looks a little exaggerated given the track record. Do you want to raise a red flag there?
As far as fiscal match is concerned, I'm a little apprehensive, not so much on the tax revenue if the economy grows at 11%, which doesn't seem very unreasonable. If deflation reverses direction, we see positive inflation, which I think we are going to see. Then it is not so much the tax revenue that worries me as the non-tax revenue. Both on divestment as well on spectrum auction, we've made very ambitious and very aggressive estimates. And on the expenditure side, it's not just the recap money, which is insufficient. On pay commission, we made only an interim allowance. At the same time, subsidies, despite the huge saving in oil subsidies, we've actually overshot oil subsidy expenditure this year as compared to the budget estimate. Despite, and I'm repeating, despite the huge saving in oil subsidies, the subsidy burden has actually increased in this fiscal compared to the budget estimates. So given the fact that on the expenditure side we seem to have underestimated, on the revenue side we seem to have overestimated, I would think the chances of a slippage on fiscal deficit are quite high, which is perhaps the government is perhaps paving the ground for that to happen through the FRBM review.
Fair point indeed. You want to take a quick...
Shashikanta Das, you want to just counter that point before we get closing comments from all our panelists?
I would like to come in there. You see, with regard to the disinvestment target, there are two components of it. 36,000 crore is the disinvestment target, and 20,000 crore is the target under strategic disinvestment. So we have to therefore break it up, and 20,000 crore under strategic disinvestment, for which incidentally the guidelines have been issued by the government today. It is doable. Coming to spectrum, now it is 96,000 crore which is coming, of which about 20,000 crore is license fee. Now that comes every year. There is nothing unusual about it. There is no surprise about that. That 20,000 crore being a license fee will definitely come. Then we have assumed about 55-60,000 crores which will come out of fresh auctions. You have some leftover auctions from the last year. Plus there are the new TRI recommendations, which incidentally project a revenue gain eventually of 5 lakh crores. But then again, as you know, as per our procedure, as per the current guideline, 25% of the auction amount is collectible in the first year. So therefore we are looking at about 55,000 crores against TRI projection of 5 lakh crores. And then we have got arrears of about 35-40,000 crores in spectrum, which are locked up in litigation and in other areas. We have done our analysis, and they are also collectible. They will be collected. Coming to the expenditure side, you see, in expenditure side, in the petroleum and diesel side, the subsidies are gone, but still we have a kerosene and the LPG subsidy. In the LPG, 75 lakh LPG has been, connections have been voluntarily surrendered. Kerosene, now government has introduced DBT in kerosene, and this whole framework, the legal framework which the finance minister has announced to have for the Aadhaar framework, and the Aadhaar framework for DBT in all kinds of government subsidies, that is going to definitely result in lot of savings. Pay commission provisions have been suitably made. The finance minister said that interim provisions have been made. We have to wait for the recommendations of the committee. There are three components of the recommendation of the 7th pay commission. One is the salary, the pay component, then there are the allowances component, and then there is the pension component. So therefore we have to wait for the recommendations of the committee, which one would expect they would come probably within the next few months, and then based on that decision would be taken. So let me assure you that we have done our homework and the numbers are credible. That's why in the beginning I said that this is a credible budget, because the numbers have been very carefully worked out.
All right, you've made a strong pitch there for the budget and for the numbers in the budget. Let me now ask my panel if they are convinced and get their final ratings as well. Swami, this afternoon, soon after the finance minister delivered the speech, you gave a rating of 6.5 on 10, which by your standards, having done budget telecasts with you for years now, is pretty good. It's a rating that the finance minister should be happy with. Now that you're reading the fine print, now that you've seen that convincing pitch made there by Shaktikanta Das and by Amitabh Kant as well, do you want to reconsider your rating, revise it upwards, downwards? What's your verdict?
No, I will stick to that. I think 6.5 out of 10. It's a good budget. Various things that they haven't done. For instance, the corporate tax, which we have not discussed. I mean, to me, the big structural change was reducing from 30 to 25. And you've done a couple of little baby steps. At this rate, I just don't see you getting to 25. You left too much. Not enough has been done, I would say, in this particular year on this big structural reform. An easy reform to have done was to convert part of the specific into ad valorem in the case of the oil taxes. So when the price of oil goes up again, automatically the same will come in. Such an obvious thing to do. Why didn't you do it? I keep saying, why don't you tax BDs? It's such an obvious thing to do. Why don't you legalize and tax cricket betting so obvious? So to my mind, there are lots of lost opportunities, very different from Maithili's lost opportunities. Maithili's lost opportunities, in my view, many of them are opportunities to lose money through third-rate investment. To me, the real lost opportunity is collecting easy, low-hanging fruit.
I wonder if Maithili wants to counter you on the opportunities to lose money there.
Oh, no, I don't quite agree with Swami, but I think I will give the government the benefit of the doubt in terms of its maths. We have to wait to see next year to see whether these numbers work out. I hope I'm wrong and Mr. Shaktikanta Das is right. I wouldn't mind that. I'd be quite happy to go with that, but I do stick by my feeling that it is a missed opportunity. Government had an opportunity to spend on the right things, and they were on the right track. They could have done it a little bit more. So my rating would be 5 on 10.
Dr. Mayaram, before I get to your rating, somewhere along the line there was this whole elitist tag that was the charges were beginning to be leveled against the government. Was an attempt also made today to undo that tag?
Absolutely. I think this one major outcome of this budget is a rebalancing in terms of the optics, that it's not purely a corporate government and so on. And then there is now a little more emphasis on what the majority living in rural areas, the poor, etc., that they also are being looked at with care.
So your final rating was 7 in the morning. Have you changed your mind by now?
No, I think I can't change the rating from 7 to anything else. I think old habits also die hard. So having been in the seat there, I know how difficult it is to do these budgets. But I would certainly like to urge Shaktikant, who's in a very hot seat at the moment, to very closely watch the implementation. And perhaps it would be very good if in 6 months' time there's a report card on how much has been implemented and how much is yet to be implemented. I think that is something which everybody would watch.
Before I come to Mr. Mukesh Bhutani, who's going to get the last word, Mr. Amitabh Kant, there's an important point here made by Dr. Arvind Mayaram as well, that there seems to be an attempt to kind of change the narrative, you know, to sort of rebalance the optics, to be seen as a government that's as concerned about, rural distress as it is about, attracting foreign investment, where the government has made a very good pitch over the last few months. Do you think that's a conscious attempt?
No, it's a conscious attempt, and I think it's been very ably undertaken. This exercise has been very ably undertaken by putting in a lot of resources into rural development, agriculture, infrastructure, irrigation, and so on. But I think the real challenge lies in how well we are able to monitor, how well we are able to evaluate. Arvind talked about a 6 months balance sheet, but I really think that we should actually monitor and implement on a fortnightly basis, because the real challenge lies in what has been set out in the budget, in our ability to deliver, in our ability to implement, in our ability to monitor so well that we get results out of what the finance minister, the grand vision, the big plan that the finance minister spelled out in his budget. And that's a big task, big challenge in terms of delivering on ground.
Mukesh Bhutani, I'm going to let you have the last word. You've heard everyone. I've not got a rating for you in the afternoon as well.
So
what's your sense?
Give us a number now.
Well, I don't know if it matters if I give any numbers, but and I don't want to be a prisoner of any numerical number, but I think the budget is good because there is something for everyone. I think the other important, I know we were very focused on bank capitalization, whether 25,000 crores is adequate or not. But there is lots on the financial sector reforms, which I think would tend to address the menace of stressed balance sheets of the bank. So I would say that I would wait to see the rest of the legislative agenda in the budget session and in the monsoon session of the parliament, and my focus really would be on what is this code on resolution of financial firms, because this is now supposed to be operating as an integrated part of the bankruptcy code. And I doubt if the bankruptcy code will go through the passage in the budget session of the parliament. So, you really have second and the third quarter to wait. The second is the amendments to the SURFASA law, because this now makes investments by asset reconstruction company 100% open for FDI, including my non-institutional investors. So I think that's also the government's way of bringing the money back. And the third thing that I was unable to get a clear answer in the earlier panel is, what is this range-bound fiscal deficit target? How is it going to work? And finally, I did not see much being spoken about the debt to GDP ratio, and we are just focused on this magical figure of fiscal deficit target. So I think a debt management coupled with the range-bound amendment to the FRBM law is something that we need to wait and see how it works out.
All right, so on that note, we do have a final word on the panel.
Yes, thank you so much, Swami Maithili, Dr. Maharam and Mr. Mukesh Bhutani, and also to our two special secretaries joining us on the show this evening, Mr. Amitabh Kant and Shaktikanta Das. Thank you for taking those questions from our panel, those probing, incisive questions from our panel, and for taking them and being a sport there as always.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.